Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
And this is just a quote from Hugo Philly. The case against Ripple does not determine the Flare launch date. So they are still firm on their date, July 4th, 2022. We've been expecting this for a while, and I guess a lot of us are still expecting our FLR Spark tokens, which we've been waiting for since 2020. I think it's been almost 2 years now. But Hugo Phillian just tweeted this out a couple of days ago. Flare and Songbird are being built to support interoperability for the entire blockchain space, F-assets for non-smart contract tokens, and Layer Cake for smart contract tokens. The case against Ripple does not determine the Flare launch date. So for those of you guys worried that maybe Flare was going to be pushed into 2023, well, it is not. Hugo Phillian has just updated us on this. Also this, guys, from the Wrath of Kahneman, again, back to the whole issue of carbon and the combat against climate change. Well, this recent NBC piece is about capturing carbon in concrete by Carbon Cure, a recently announced Ripple partner. So Carbon Cure, a Ripple partner, and here's what they recently released. Carbon Cure, Ripple, and Invert strike the world's largest deal for carbon removal via mineralization. So carbon removal headlines are rolling out this week. 3 companies, Invert, Ripple, and Carbon Cure Technologies, have signed a carbon credit purchase agreement for permanent carbon removal through carbon mineralization. The agreement is worth $30 million and marks the largest investment to date in durable, verifiable carbon mineralization and storage. Boy, that is a mouthful. Carbon Cure is a company founded in 2012 that offers a sustainable solution for the production of concrete. Its technology is still nascent and injects captured CO2 into fresh concrete, where it is immediately mineralized and permanently locked away, never to return to the atmosphere ever. So it's an interesting, innovative solution, I suppose, for carbon emissions. Again, though, the carbon issue, the climate change issue, you know, this is one of the bigger initiatives for Ripple and XRP, the cryptocurrency, one of the first ones that was created that was moving away from proof of work all those years ago. And so here's just another project where they talk about removing carbon from the atmosphere and neutralizing it in concrete. So innovative, interesting. I will link this in the description if you guys are interested in reading the full article. Michael at Val5Links posted this. So back to, you know, looking at the macro perspective of the market. The day-to-day is going to get scary. No doubt it is going to get scary because, you know, when we see our portfolio dip by 5, 10, 15%, it gets a little frustrating, especially since we've been waiting for so long. And you know, even if I just bring up the Bitcoin Fear and Greed Index, let's see where it's at today. I don't actually know where it's at today, but I'm guessing fearful. Yeah, 23. So 23 is extreme fear. Yesterday we were at 24, and last week we were at 24. Last month we were neutral because last month we were in and around the same area, but we were moving to the upside. And then by the end of March we were at a high, a localized high for Bitcoin, $48,100, before it came toppling back down again. So we're going to see this, guys, a lot for micro trading. But the general outlook isn't looking so bad. So again, wanted to thank Michael for posting this. This is an interview, or at least a transcript, from macro guru Raoul Pal. He was recently on, I think it was, BitBoy's channel. And he says that while he's still bullish on crypto, the markets need a shot in the arm to ignite the next leg of the bull market. So he is of the opinion that there is still one leg up for cryptocurrency. And, you know, this is not the top, even though we are seeing, you know, a 5% decline for Bitcoin or whatever it has been today. This is still not the top, and he is very confident that we are not going to see lower lows for Bitcoin and lower lows for the altcoin market. What he says is this: I actually think that we're still probably in kind of the first phase of the next bull leg up. That's what it feels like to me, but we need to see something change. What is the thing that's going to change that? My guess is if the US economy or the global economy starts weakening, then the market is going to say, oh, there's going to be less rate hikes than expected, and therefore that tends to be good for crypto or technology, kind of Cathie Wood style technology investments. I think at the margin, it's those kinds of things. The macro guru also said that institutions are continuing to invest in the crypto space even though the number of retail investors is dwindling. So that is interesting. The big money is still moving its way into crypto, whereas the small guys, you and me, we're taking our money out of crypto. Well, not me, and probably not you, but the small investors taking their money out of crypto because they are feeling just this. They are feeling the fear that, you know, it's at 23 and they're seeing the market decline, and you know, although these are very, very small declines in the grand scheme of things, people are getting scared. And, you know, he's also mentioning that it is a result of inflation. Things are costing more money, so people are thinking to themselves, whereas I mentioned at the beginning of this video, people may be using their crypto to pay for groceries and stuff like that. People are also taking their money out of crypto to be able to have fiat to pay for groceries and stuff like that. So retail came out in May, and the reason they came out in May was because inflation started rising, and so people had less money in their pocket. Let's also not forget, back in May, okay, right over here was the beginning of that downfall and the beginning of inflation, and so people were starting to feel the heat, and so they took money out at that time, all-time highs at that time, bringing the market down 50%, if you guys remember from last year. He goes on to say, we just saw less activity from retail, but the institutions have been there. I'm seeing institutions set allocation. I'm speaking to all the biggest pension funds, family offices, banks, everybody, and they're all setting themselves up. People are starting to allocate capital. Powell also says that retail traders will return once the crypto markets start showing signs of life again. So that's the other thing. Once we start to see that uptrend and once we start to see all-time highs, FOMO kicks in, right? And we start to see that in waves, as he describes down here. People keep thinking there's going to be a wall of money where one day everybody comes in at once. It doesn't work that way. It's like a tide that comes in before you know it. You're in that deep. Parabolic moves happen once you start to see the price move. I know that sounds ridiculous, but right now, retail will come back if they sense they can make money, but they won't do it if they can't, because they can't take the risk. Because we're seeing inflation, right? Grocery prices up, gas prices up, all that stuff is really hitting people's pocketbooks. But, you know, at the end of the day, once they start to see that initial wave, they jump in late, right? They ride the wave, FOMO kicks in. The exact wrong time to buy is when most retail players will end up buying. And so this is the theory. So he says down here, just to reiterate, my guess is if the US economy or global economy starts weakening, then the market is going to say, oh, there's going to be less rate hikes than expected, and therefore that could be the catalyst for the crypto market. So in a separate tweet here from Raoul Pal, he says, I think the big surprise on the near-term horizon is a collapse in economic growth in the US. He just posted this yesterday. The SPX is pricing ISM at 50, and so he's just demonstrating that with some graphs here. The dollar is pricing ISM around 52, but the bond market are pricing current ISM, not future ISM, and it's not clear if the equity market has further downside or the dollar further upside. But commodity inflation peaked a while ago, and the China business cycle suggests that growth might be lower than most expect. So my view, he goes on to say down here, is that we are rapidly approaching an inflation point where peak inflation fears give way to lower inflation and fast deceleration growth. That will change the structure of the markets, but first we need to see if we get a correlation of one event in the coming weeks. The answer to higher prices is demand destruction. The Fed is a sideshow, as the markets have already taken rates up so far as to invert the yield curve, and inflation is acting as a huge monetary tightening. If growth slows rapidly, commodity prices will fall. And the thing I've got my eye on right now is oil. This pattern could be a wedge, but I also think it's more likely to resolve as a GMI crash pattern, bringing oil back down to $70 or $80 per barrel. But time will soon tell. So he is saying here, you know, the market is looking robust now, but at any moment, we could see a move to the downside, which would ultimately weaken the market, bringing cryptocurrency prices up further. I also just wanted to bring this up, guys. It's kind of a little sidebar. I know the Digital Asset Investor did do a video on this yesterday. The fact that there were some companies that were shorting XRP at the height of the bull run, the last bull run back in January of 2018. But did you know who else was shorting XRP? Well, we know suspicious activity has happened at Multicoin Capital, suppressing the price of XRP. So now we have to look in all directions, including foreign governments. Nirvana Capital, an early investor in Ethereum based out of Beijing, and a Multicoin connection. So this coming from Matthew Liny. Nirvana Capital is a San Francisco, Beijing-based venture that focuses on blockchain, fintech investment, and incubation, and they are connected to the Ethereum Foundation. You can see over here, former Nirvana Capital partner Mabel Jiang joins Multicoin Capital as executive director. Well, did you also know Mike Novogratz shorted XRP? This from Notorious XRP here on Twitter. I bet you dimes to donuts, they all shorted XRP. They all had inside information, especially when you are at the center of it all.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.